I'm interviewing Bish tomorrow from Stormrake about where Bitcoin's at, but it's not just Bitcoin that's seen massive drawdowns. Tesla's dropped dramatically from 460 down to, it hit 370 or 380 last week briefly. 380, it sort of bottomed out and bounced around 400. So we're seeing huge turmoil in the markets. And I'd be interested in your take, Mark, because what I've been consuming is a whole bunch of content specifically around Bitcoin. And I've been listening to people right across the spectrum, and I'm interviewing Bish tomorrow specifically about where they're seeing, the Bitcoin price go. I've got my own views on what I think's happening, but I'd love your views, Mark. Like you might want to tell people where you are with things at the moment.
So I think, high level, I think I said last week or the week before on the podcast that 97,000 for Bitcoin USD was a key level. And if we broke that, nothing good happens under 97, that we needed to hold 97. And if we held 97, I thought that in Q1, Q2, we could do 125, 150, 170.
We're talking US dollars.
US dollars, right? But we haven't held 97. And long-term, indicators are triggering. That basically the last couple of times that they triggered, you saw a 50 to 70% drawdown in the price of Bitcoin. A lot of the view that I have at the moment and a lot of the people that I follow kind of see Bitcoin as the last functioning fire alarm for when things are about to start getting difficult. You see the S&P, right? Like in the last couple of months, a lot of the high beta names, which means names that have gone up 300-400% this year, have come back 50 to 80%. Right, and what you're seeing is that these retail names are usually leading the market. So you got Bitcoin that's like a smoke detector, and you've got these retail names that lead the market in direction. And they've come back a lot, and now you're seeing the S&P, which is only like 3, 4, 5% off its all-time high now, but it was only 2% off its all-time high as of last week, is now coming off as well, and it's starting to deteriorate. My opinion was that we would see strength into Q1 next year, and then we would get a 20 to 30% pullback, a significant pullback. It looks as if my base case on that has changed. It looks as if the pullback is coming now. And like I said, indicators on Bitcoin that the last time they triggered, you saw a 50 to 70% drawdown, are triggering. And 97, which is that kind of line in the sand, has breached. And I think we might be in for a little bit of a crash crisis, and I think the stock market will follow it. But after that, more liquidity comes, right? I think everybody kind of tried to front run the big print. We've spoken about it on this show. Larry Lepard talks about it. Everyone's kind of trying to front run the fact that they know that the Fed and central banks have to put in more liquidity. What I think people haven't taken into consideration is that just as they have the power to pump markets, they have the power to crash markets in a way. Like 3 Fed governors last week all came out on the same day and said, guys, I don't know what you're thinking, December rate cuts, but they're not in the bag. It's like it sounded very coordinated. And so I think, yes, that everybody knows the big print needs to come, but I think there's going to be a risk-off period first. And I think, you could see significant drawdowns. I've given back some of my gains that I made in 2024, and I've gone basically, except for my HODL stack of Bitcoin, which I purchased many years ago, I've basically gone completely to cash in all of my accounts, and I'm waiting to see how it pans out, because I can ultimately buy back higher if I need to, but if it goes down, I don't want to be riding everything all the way down. So
it's funny you said earlier off camera that your property settles in July, and it's probably not a bad time to have a bit of liquid cash, because I've been thinking, just seeing what's happening from the outside, I have, a lot of my wealth in property, thinking of maybe selling off one of the properties, get that liquid and invest in some of this, when the blood hits the streets, which I think is kind of, it's not that it's happening, right? Like we're talking, there's, when you look at, Bitcoin is an example, and you pull up your Bitcoin stack and you look, oh, wow, look what it was worth 6 to 8 weeks ago, and look what it's worth today, right? Like you can have all the conviction and the rest of it, but you still have that decline and going, okay, but then you need the conviction to go and buy. Like for me saying, hey, go and sell the property and actually go buy it. Like you actually have to do it rather than just talking about it. You then got to call the agent, you got to go get an appraisal, and you got to put your balls,
Well,
on the line and go and do it, and then hope that, with the Tesla pullback or whatever it is, or dollar cost average over that time. And like, I was talking to a mate of mine who was new into Bitcoin, and he would have bought at probably near the top, right? And I'm like, dollar cost average, please, just dollar cost average. It doesn't matter. I'm doing this for long term. Yeah, but still, you want to try and get your best, best foot forward as much as possible. And if you just dollar cost average, whether it's not daily, it could be weekly, it could be monthly, whatever that, you work out, you could be buying right now at, 94 or whatever. I haven't looked at it today, but
no, I think it was 91 earlier,
91. There you go.
But yes, and like I said, I've my hodl stack of Bitcoin is the only thing I've kept. But the Bitcoin that I bought for my folks, I sold that because I don't want them to wear that drawdown if 50 to 60% drawdown happens. So I've sold them at a profit, and if it goes up, I'll buy back higher, and if it goes down, I'll buy them double the amount of Bitcoin. And I think it's so important, and we can't just gloss over what you just said, because now people's conviction is going to be tested. And I still maintain that the best trades over the next 5 to 10, 15 years are going to be gold and Bitcoin. But you can't buy at any time necessarily unless you're dollar cost averaging. If you're dollar cost averaging, then it matters less what your entry price is. But if you took your entire stack of money, 100 grand, 500 grand, whatever it was, and you put it into Bitcoin at a certain time, and then it goes down 50%, your conviction is going to be tested, right? So, these are the things that we have to consider. The other thing is, like, the last 12 months, gold is up 100%. The stock market is all-time highs. Everything is priced to perfection.
It's interesting on the way here. I was listening to a pod we all listen to, Invest Answers, and they had the 4 guys on there. It's like an emergency pod about the year and whatnot. And it's interesting. Be careful who you listen to. Obviously, one of the guys just said, like, it's like, which influencer are you listening to in an unregulated market using leverage? I mean, it's got a heavy concoction of fuck up written all over it. But then you hear these guys who profess to be the professionals, and all I took away from a high level, I'm not a macro trader like you, Mark, is they don't have a fucking clue. None of them do. That's all absolutely speculative betting 101. All the current indicators that have been historically for the last 4 year cycle, all the correlations have been blown out of the water against gold, against everything. There's no correlation now that stands that formerly did for all the last 4 year cycle. So it's brand new uncharted territory. What is their take on it?
What I'm finding as someone who's been, like, since 2018, 19, kind of daily looking at or learning something, is that the cycles rhyme, but every cycle has this nuanced different thing that catches people out. Like, I would have liked to go on to cash a lot sooner than what I did, but I was of the opinion that it was going to continue. And so every cycle has this little nuanced thing that changes, that catches people off guard.
Big nuance like this around.
Well, I mean, the cycle has been the timing of the crypto cycle has been exactly the same as past cycles in terms of when it's topped. But the thing that is different this time is all the top indicators didn't go off.
Bitcoin's
it didn't have a parabolic run.
Yeah, it's
even with all the hype behind it, with all the insto behind it, with all the exception behind it, everyone thought.
But if you look at why it didn't have a parabolic run, right? There's always an explanation for it after the fact. The reason that Bitcoin didn't have a parabolic run, and the reason that the altcoins didn't have a parabolic run, is because where did the parabolic run happen? AI stocks and call options. If you look at the volume of call options, it just exploded. So all the degens, retail degens that would have been playing in Bitcoin and alts, were playing in AI and call options.
Degens, for the listeners, means degenerative gamblers. It's people who are basically taking leverage and gambling on things. And what Mark's saying is, usually that's unsophisticated retail punters that throw caution to the wind, lever up, and then just try to chase the dragon.
They cause the parabola. They cause that spike.
Mark, it's funny. I took a screenshot of one of the this thing they had this morning because you'd love it. I think it was Glass Hour, where you can see the longs and the shorts and whatnot. And even after that recent flush on the 11th of October, the volume of the perps long compared to shorts is just nuts. It's ready for another flush. People are so bullish. It's not funny.
And we spoke about that before the show, Adam, that I was talking about this article that was in Variety or something about the meme coin traders that are going to free their bloodline. And the Luke Groman, Forest for the Trees, who was citing the article, basically said it reminded him of a book he read 15 years ago, When Money Dies. And it talked about Weimar Germany and how in these periods where there's a fiscal mess, there's obviously a fiscal mess, which is, incidentally, the reason that we've been talking about all the negative things we've been talking about is the fiscal mess is the reason. But that's what people do. They go into this speculation mode, this degen mode, this gambler mode. And with that, social cohesion and morals and trust and all those hardworking values kind of go with it.
It's funny because like I was listening to a post by a friend of ours, Dom, and he got asked a question, Bitcoin or property. And I said this before on a pod, I think too, like it's hard to beat leveraged manufactured growth, right, in property, because you've got control. The reality is this. We have no control in any market, right? Because the property market can run hot and then all of a sudden immigration stops and all of a sudden they increase interest rates. Well, guess what? That's going to have a massive impact on property. What control do you have over it at that time, right? The same thing with Bitcoin, same thing with stocks, the Tesla. No one has control, right? You just got to try and be as best as you can on reading the play.
I got some feedback last week, and the guy was full of praise. I sent it to you guys. The guy was full of praise on the pod, watches it every week, but he was kind of a bit distressed at the fact that we all had differing opinions on property, and he thought that we should become more aligned. And I kind of said, I appreciate that, but if you're confused, that's a natural reaction to the state of play that we are living through right now. We are going through a changing times. We're going through a time where it's the right response to be confused because we don't know how it's going to pan out. In order to reshore the US, in order to reshore here and get productivity booming, we need to pay workers more, right? Like we need to incentivize people to increase productivity. And that's going to create secular inflation. We've had secular deflation for the last 40 years. It's a complete regime shift. And so if you're uncertain, it's the right response because things can change very quickly. And the one thing that I can guarantee during this time is volatility. I can't guarantee what price things are going to be when. I still believe that putting money into gold and Bitcoin is going to outperform property and is going to outperform the stock market as a whole. That's my personal belief. But the one thing I can guarantee is volatility. You're going to get plenty of opportunity.
Just speaking to Bitcoin for a minute, where we are now is not far off where we were a year ago. Bitcoin's actually been...
We're down on the... Yeah.
It's not that far down, but it's actually been less volatile than the market. It's been less volatile than gold, which is really weird for Bitcoin.
But you can't say it hasn't, because gold has doubled in that time. The stock market is at all-time highs. So it's down. The thing that's totally difficult is it's down on a year where everything else is up. And that's kind of strange.
Yeah, exactly. That was my point. It's not that Bitcoin's great or anything like that. I mean, I think Bitcoin is amazing, but it's just totally uncorrelated and not making any sense.
Like it's all.
And I've been listening to, I tend to, James, agree with you, is that in the last crypto crash, I remember Raoul Paul, I'm unreasonably long on ETH, right? I went and invested $2 million into ETH at that time. Jeez. When Raoul was like,
when he bought call options. I bought 5% of my portfolio in call options.
Yeah, that 2 million turned to like 500 grand or something like that, and then I rotated it out, put it all in Bitcoin, and this time around he's been flogging the banana zone, right? Like he's one of those voices, those talking heads, and their receipts when you go back are all dog shit, because what you said, James, is a lot of people don't understand. But I do want to add some commentary, because I've watched a lot of content around Bitcoin particularly. And I've been watching people like Dan Tapiero, came out this week. And Dan, I met in Dubai and interviewed for the pod. If you haven't watched that pod, you can watch it. Dan's an incredibly successful investor. He manages $2 billion of other people's money. And Dan had some really interesting thoughts. I listened to Jason Pizzino, who we also had on the pod, who's a data analyst from Australia. JP Morgan came out and said 94,000 is what they predict is the Bitcoin bottom, which is where we are kind of right now. So there's all these conflicting views. But talking about Bitcoin just for a moment, some of the things that I sort of think about it is that Bitcoin is relatively simple. It's one of the most honest markets in that there's only a fixed supply. You can't manipulate the supply or anything else. And at the end of the day, all markets should be based on willing buyer, willing seller, etc. And so with Bitcoin, the reason the price hasn't gone up, in my opinion, and this is what Dan said, and also what Jordi Vissa sort of said, is that we've had this IPO moment in Bitcoin. So what's happened is when we hit $100,000, and Dan Tapiero said this months and months before it hit 100,000, he reckons once it gets to 100, it's going to stay there for a while, because what's happened is we've had the structural change in the Bitcoin network and who owns it. In the past, it was all Main Street. It was mum and dad investors and tech bros and, cypherpunks and like individuals. Now, Wall Street has woken up to what Bitcoin actually is and the power of it. And I've spoken to institutional investors when I've been traveling the world, and big family offices and, these sorts of things, sovereign wealth fund people who are actually now flooding their money into Bitcoin. So what's happening is when it hits this $100,000, there's been these hugely wealthy people that are like, all right, I'm now going to have my IPO. I'm going to take off the table this money, because for them, the likelihood of getting the returns they've got when they bought for $10 or $100 or $1,000, and they look forward, sure, Bitcoin will probably go to $1 million a coin, but that's only a 10x. For them, relative to them, that's nothing compared to what they've had. Of course, they want to take some money up. Now, the Bitcoin maxis are going, why would you flick the Bitcoin for something that's inferior? Say that when you've got a few $1 billion of liquid that is available to you. So he's basically saying, we're having this structural change. We're seeing whales sell at this 100,000, which is a huge psychological milestone. And of course, they're rotating out. And the Bitcoin market has structurally changed. We've had, and what Dan said is, look, there's going to be I draw down here now, and he said it could go down to 70, it could go down to 50, but then I think it'll roll back to 300, 400, 500, et cetera, in time. And that's what's normal. It's not just Bitcoin. You look at any of these big companies, Amazon, Facebook, any of these things in the early days where they were establishing price, that has been the journey of all these major assets. And so, and the average person listening to this, if I put myself in their shoes, what I think you need to take away from this is trying to be a trader in these markets, even a swing trader. So there's day traders, which make their money on the daily or weekly, right? And then you got swing traders, which generally sort of wait for Bitcoin to crash, then come in and buy, and then wait for it to high, and then go and sell. And that could be a months or years type of activity. And then there's long-term hodlers. I agree with Dan Tapiero when he says, if you are trying to be a trader, you're probably going to lose. The only thing is to get deep conviction about what you're investing in these things and hold for a longer period of time. And if you hold for 10 years, it's almost impossible to lose your money if you know what you're doing.
Yeah, I agree with Jordi Vissa and the structural changes. I think we spoke about them a couple of weeks ago on the pod. And I believe that that's why potentially Bitcoin has underperformed this year. But I think the biggest contributing factor to the price of Bitcoin is the liquidity picture, right? Like how global liquidity is looking. And if liquidity was on the way up, you probably would have seen less of these OGs selling, because they would have been riding the price. But I think the fact that liquidity is coming out of the markets, like we're seeing at the moment, is what's led to a lot of them selling. But I also can what you said about trading, I can 100% vouch for, because in 2024, I made like a handful of trades, swing trades, where I saw an opportunity, went in, bought, wrote it up, and made money. This year, I started a 10K challenge. I started trading much more than what I wanted to trade, because that's the thing. Trading becomes like a little bit of an addiction, where you're just putting on trades for the sake of it. And the more that you trade, the more you increase your likelihood of failure.
Totally.
Right? Because even the best traders in the world have a win rate sometimes of only 50%. So the more you're trading, if your position sizing is not right, the more that you can lose.
If you look at stats, I used to have an FX business. We had a brokerage. We see that the receipts, basically, 93% of the people who technically trade lose money, retail, because they get wiped from this insto. So mum and dad, if you're listening out there, if you're losing, it's the stat. 93% of people get cleaned up. In a choppy market, probably more. But on the daily, it's not a fun sport. It's a tough sport.
But I because I know we've spoken a lot about this in heaps of episodes. So I just want to just say for the record, I still personally believe gold and Bitcoin over the next 10 years, like you said, you will not lose money. But everyone at home needs to make sure that they have a strategy, like Eric was saying before, with dollar cost averaging, etc., that they are comfortable with when the drawdowns come, because the drawdowns will come and they will continue to come.
I bought 30 grand of Bitcoin this morning at 92. Do I think it's going to go lower? Maybe. Do I think it's going to go higher? Absolutely.
Yeah, but you didn't buy $3 million worth of Bitcoin. You didn't buy 300 grand's worth of Bitcoin. You bought 30 grand's worth of, and this is what I mean, right?
buying.
Yeah. Everyone has a different strategy, but most people don't know, right? They haven't worked the calculations of what do I got, work out your percentages in assets, in liquid cash, where it should be. Again, someone like yourself could be buying a lot more Bitcoin than 30 grand, but you're buying 30 grand because you're comfortable with that. You're going, you know what, if it goes down to 70, it is what it is, but my conviction is going to go back up anyway. So it doesn't matter. And then in a month from now, you'll buy another 30 or whatever it would be. But you understand, right, your levels. I think most people don't understand what their levels actually are, because they don't have the plan, right? And they're trying to read a playbook without having the plan of going, how much are you willing to risk?
And this comes back to what we were talking about, that everything is becoming a zero-sum game. It's like Bitcoin becomes my Hail Mary because I don't know if my job's going to be here, or because I've got to make it somehow, because I don't know if I can make it in property, right? And that's that's the danger of getting caught into that vortex of information, right? And that's why I've personally want to keep pushing for positive news stories, so that people don't feel like they need to make desperate decisions, because I know that when I get that rush of needing to make a home run or a desperate decision, that it doesn't bring the best out of me at home with my family or in my trading, right? And so I'm pushing that, because it's also a real-time thing and a change that I'm trying to change in my life. Because, I don't want to get woo-woo, but it all comes back down to, why do we do those things? Because on some level, we don't feel like we're enough compared to the next guy or the next guy or the next guy, right? And we need to return it back to gratitude. And